Hi, in this video, I am not going to tell you how to make money, but I am going to tell you how to ensure not to lose money. Over the years, I have done an extensive research on the financial life of Indians, and I have identified not just one or two mistakes, but 28 mistakes which destroy the financial life of Indians. Before we proceed, I would like to recommend one of my video on impact of coronavirus on the various Indian sectors, and you can find it on the top right link. Mistake number 1. Buying insurance policies for investment purpose. Have you invested your money in insurance policy to get a return in future? Big mistake. Out of 100 people I have spoken, 95 people have made this mistake. When I asked them what is the return that you are expecting from your insurance plan, nobody had an answer. Have you also mixed insurance and investment? If yes, ask yourself, what is the annual return that you would get from your investment? I am sure you would not have an idea. When it comes to insurance, very few people understand the difference between term plan, endowment plan, ULIP plans, etc. I'll make a separate video explaining the different types of insurance. Mistake number 2. Not able to break credit card mystery. Credit card is like a double-edged sword. On the one side, if you can't control your spending, then credit card can rip you apart. On the other side, if you're someone like me who can control the spending and pays the complete credit card bill on time, then you can reap a lot of benefit out of it. For example, free airport lounge accesses, huge discount on purchases, free petrol, buy one get one movie ticket, etc. Mistake number 3. No idea about the power of compounding. Everyone has come across the formula of compound interest during their school days, but very few people really understand its implication on real world. It is the reason people do not start investing early and lose out on the power of compounding. Albert Einstein once said that power of compounding is the 8th wonder of the world. You don't need 10 times return to generate wealth. You just need 10 to 15% annual return over a period of 15 to 20 years to create wealth. Power of compounding will do the wonders for you. Mistake number 4. Buying stocks based on tips without any knowledge. Nowadays, every Tom, Dick and Harry is giving free stock tips over Facebook, WhatsApp and TV shows. Unfortunately, a lot of people fall in those traps and end up investing a lot of money. What is the end result? They lose everything. Mistake number 5. Becoming a victim of lifestyle inflation. Moving from 2 BHK to 3 BHK just because you have got a good hike, or upgrading your car just because you have got a bonus, or buying an iPhone worth 80,000 although you make a salary of 30,000 per month are examples of lifestyle inflation. While there is nothing wrong with buying a fancy car or phone, the problem is with spending over and above your means. Mistake number 6. Buying things just because they are on discount. From Amazon's Great Indian Festival to Flipkart Big Billion Day sale, everyone is encashing on the Indians' weakness to buy things when they are on discount. 7th mistake. Getting tempted to go for an exotic vacation or buying a new car just because your friend has put a post on Facebook or Instagram. Facebook and Instagram were introduced as a social media platform, but they are actually ripping apart the entire social fabric of our society. Facebook and Instagram are now more of a marketing platform where people put posts to get few likes and companies promote their product and services. Most of the people fake a perfect life on social media, whereas their real world life is much different than their social media life. Mistake number 8. Spending a bomb on weekend parties. 5 days work and 2 days party. This is the new culture in India. Pubs are jam-packed on weekends where people would spend a lot of money and by the end of the month they are left with nothing. Mistake number 9. No track of cash flow. Most of the people don't keep a track of their cash flow. What is the result? By the end of the month, they don't know where the money is gone. I have seen people earning 1 lakh a month, but by the end of the month, they are struggling to save even rupees 10,000. Mistake number 10. No emergency budget. It is important to prepare for the rainy days. When Jet Airways recently sacked its employee, I read somewhere that some of the employees are struggling with the basic financial need. For example, paying their home loan EMI, their children's tuition fee, or even the basic requirement. Not having enough money at the time of emergency could even result in embarrassing situations where you need to borrow it from your friends and family, or even you need to break your investment. Mistake number 11. No medical insurance. I have seen people losing out their lifetime of saving just because they did not have medical insurance. One incident can shatter all your financial dreams. Better be insured. Healthcare cost is rising in India at a fast rate and it is impossible to manage it without medical insurance. Mistake number 12, no financial plan. People don't know why they need to save money because they don't have any financial goals. A financial goal could be to invest for a retirement corpus of 2 crore rupees for the next 15 years or saving 5 lakh rupee to buy a car in next 2 years. Mistake number 13, no diversification. Some would invest all the money in real estate, some would invest all the money in gold, or some would just like to keep money in FD, whereas some people just like to invest all the money in stock market. Very few people understand the right way of diversifying the investment. Mistake number 14, spending all the hard-earned money on the children's marriage. Thanks to our Hippocratic society, people save their money their entire life just to spend it on random relatives who only bother about food and arrangement. A middle-class man saves his entire life for the children's marriage, making thousands of compromise which gets wiped out in just 2-3 days. Certainly not worth it. Mistake number 15, buying excessive gold only to keep it in the locker. This results in money getting blocked and not generating any return. While it is good to keep some investment in gold, it is not good to keep excessive investment in gold. Mistake number 16, an extremely conservative approach with investment. Traditionally, people have been risk averse. They would keep the money in FD and just get 6 to 7% return. While this approach could work for a retired person who do not want any volatility, this is certainly not a good approach for someone who has just started earning and want to create wealth for the future. Mistake number 17, lack of understanding between real and nominal return. Money kept in saving account is actually getting shrinked. The reason is simple. The inflation rate in India is much more than the interest rate from the saving account. For example, if the inflation is 5%, then next year your money worth 100 rupee would be equivalent to rupees 95. A lot of people make this mistake of keeping excessive money in saving account and shrinking their money. Mistake number 18, lack of clarity between asset and liability. The major difference between rich people and poor people is that rich people invest in assets that generates income, and poor people are trapped in the liabilities paying loan for the rest of their life. Mistake number 19, considering frugal as cheap. We Indians have been traditionally frugal, where we spend economically. But this new generation like to show off their fancy gadgets and think that frugal is cheap. When one of the world's richest man, Mr. Warren Buffett, can live a frugal life, why can't we? Mistake number 20, procrastinating investment decision. We keep hearing that I'll start investing from tomorrow, but the problem is that tomorrow never comes. Mistake number 21, spending a lot of money on fancy stuff. While there is nothing wrong with buying fancy stuff, the problem is buying fancy stuff even when you can't afford them. Mistake number 22, lack of patience. A lot of people lose their lifetime of saving just because they don't have the patience to remain invested for a long duration. You don't need a high IQ to generate wealth. You need patience to remain invested for long duration. Mistake number 23, depending on others for investment decision. People say that I don't know anything about investment. Please manage my money. Unfortunately, a lot of people are dependent upon others for their hard-earned money. Mistake number 24, not discussing money matters in the family. I remember an incident where the husband died and the wife had no idea about the family assets. No bank account details, no passwords, no insurance details. She had a terrible time getting all this information. Ensure that you share this information with your spouse. Mistake number 25, getting too greedy with the investment. People blindly invest their money in penny stocks, days trading, future and options. They eventually lose all their money. What is the root cause? Greed. Mistake number 26, buying stocks on peak and selling on fall. Most of the retail investors get overexcited when the market is rising and they end up investing when the market is at its peak. Eventually, when the market corrects, they sell their investment at loss. Mistake number 27, wasting time on unproductive things. Rather than learning new stuff and growing their skill set, a lot of people end up spending hours and hours on social media. Final mistake number 28, lack of disciplined investment. Instead of spending what is left after investing, people invest what is left after spending. This results in indisciplined investment. Do you know what is the root cause behind all these financial mistakes? lack of knowledge about personal finance management. Most of the people have a myth that financial management is an extremely complex subject. I used to think the same a few years ago, but today I not only invest my own money, but I also spread financial knowledge. I'll also try to create a separate video for each mistake in the future. If you like this video, give it a thumbs up and share it with your friends and family. If you want more content in the future, don't forget to subscribe to my channel.